Friends, you're welcome back to the channel. So today I'm so excited and happy about what we are going to talk about. We are going to talk about order blocks. As you can see, if you've been watching my previous videos, you've seen this setup before, because I made a video about it. But that video I made, I was predicting that prices were going to fall from this area up to this area. So I'm going to link it in the description. Please watch it and you look at the issues that I was looking at, the confirmations that I was looking at for me to predict here. So watch until the end. I'm going to be explaining my new prediction, why I expect prices that they go right now. The prices are here. I expect them to come to this area and they'll be buying up to around this region. You get? Then the other thing that I want to talk about, we are on H4. You get? So we are on H4. So I think you can really see whereby if I predicted the prices were going to fall from this area up to this area, and now let's see the amount of pips that we'll be having. Actually, it was from this area. Now let's see. Would have gotten over 1,371 pips. You get? 1,371 pips. We are on H4. So you're going to watch that video. I really drew these boxes predicting like this. So what is the main concept? Though I'm talking, the main concept is about order blocks. You get? So I'm going to be talking about order blocks. But then there's should I call it a subheading or another concept under order blocks that I want to talk about? It is directional bias. You get? But this one, it's not only about order blocks, but when you're trading, it's always good to have a directional bias. You get? Even before you use indicators, and at the end of the video I'm going to be putting an indicator. You get? But then like for me, my style is I always try to have a directional bias. That's why I draw these things, and I know that, let's say, prices are going to come here basing on certain confirmations that I'm going to talk about. Then when I put an indicator, there is something I'm looking at. You get? So personally, I like divergence and convergence, or like shifting, let's say, upward trend and downward trend. So I like such indicators, but I already have a bias. So I had a bias here, and we are going to see that when we put an indicator. You get? So but let me quickly go back and I talk about some of the issues, how we reached here. You get? How we reached here, because we were here, like prices were in this region, and I was like they were going to fall up to here. We are on H4, and finally we've achieved it. You get? So and I'm going to be talking about the new prediction, that is the directional bias. And still I'll make another video to review ourselves. I'm quite sure that we are going to reach this point again. Remember, we're on H4 for sure. This one can make you a lot of money. So one short thing, I would remind you to please subscribe to the channel if you've been watching my videos. I've seen most of you watch my videos, which I appreciate, but you've not yet subscribed. I would request you to subscribe. And then the other thing, you leave a comment down below about what you want me to talk about. You get? The other thing, I don't trade for anyone. Don't send money to me. You get? Maybe later on I'm planning to do some kind of mentorship, but you know, these things, they take a lot of time. So I'm just thinking about it, and if I'm to do it, I'll have to organize some kind of tutorials that are a bit more organized. You get? So that's it. So let's move forward. So why we reached here, I was in that video about actually we are using step index, but even those that are used, this concept is working on forex, stocks, everything. You get? So don't switch off thinking that it's only for volatility indices. So let's start. That day I was explaining this part that I called mitigation. It came as a result of imbalance. You get? So we realized that as prices were falling in these regions, but majorly this one, you can see that when as we are breaking the market structure here, we can only see bearish candles. We don't see a mixture of bullish candles. You get? So we said that if in such situations that it's that when you see only one type of candles at the break of market structure. Now for this case, it was a bearish trend. You get? Sometimes it's a bullish trend, but you look at the break of market structure. You get? So you realize that now if there are only one type of let's say participants, by that I mean the traders, here we only see sellers. So that means we shall have to fill up the gap, because the market is supposed to be a mixture of buyers and sellers, you get. So at least the way it moves in this kind of zigzag, you get, buyers buying and selling. So when we see this kind of behavior, we realize that markets the market is going to bounce back with a mixture of buyers and sellers, what we call mitigation, whereby we are going to see a fill up of the gap. It's like here there was a gap that was created, you get. But now overall we can see that prices have been going up in this region. In this region, prices have been going up overall, like in the overall picture, but you can see that there is a lot of a mixture of between sellers and buyers, you get. Unlike here where you see that it was just falling, you get. And whenever you see such situations, even on M15, so we spotted this on H4, but then there's another video that I made when we spotted it on M30, you get. So it happens at all time frames, so don't think that it only happens on H4, you get. So when you spot such a thing, or if at all you've analyzed your markets on a higher time frame, and then you see some kind of structure like this, and then you're here, be careful when you're trading, because in this region you're likely to lose, you get, unless you're extra careful to look for confirmations that are going to be buying, you get. And then we saw them around this region, we are going to see opportunities for us to buy, you get. And then so now that is done, this is imbalance, that was the beginning of the things. Then I'll quickly talk about order block. This was the order block, because I said that for any valid order block there must be a break of market structure. So you can see that in these regions we can see that prices came here, they retraced, and then they came to break structures, you get. So personally I identify these ones as H4 supply zone. I can identify it as H4 supply zone, then H4 demand zone, where someone can say resistance and support, you get. It depends on how you take it. So now I labeled this area liquidity. This area from here up to here, it is liquidity. Why? In this area, whenever there is imbalance, trust me, on the second leg of the W, first off, when we are going to fill up this gap here, normally we get a W, you get. We get this W here, you get. That's why I have this arrow here, because I'm expecting prices are going to fall back to this position. And then when you time entries perfectly well in this region, if you want to trade under the mitigation part, you target this one so well. If you target it amidst all this, prices are going to, in this area, trust me, they're going to be moving the way they were moving here. But then if you already entered in around this region, as this chaos is happening, for you know where to get out from. Like for this region, I know that this is the take profit, you get. This is the take profit area. So as they are hitting people's stop losses, for you already comfortable, because you joined in early, you get. That is the direction of bias. If I don't get confirmations here, I will not place an entry and I save my money, you get. That is the direction of bias. So then we fill up this part. This is liquidity, and whenever I talk about liquidity, it is the part where we can see that you're likely to lose money, you get. That's how I can simply put it. Then if you miss out on this opportunity, where else do you get an opportunity? Normally when we are finishing up the liquidity part, we get a new high. This is why I draw this one. We get a new high that breaks this W. Like now here we are like prices, we've gotten this high before we are falling here. So now the time we shall get another high here, you get, let's say up to here, like here. So when prices fall back, trust me, when you backtest even on other assets, when prices fall back like this, they are going to find some kind of support, you get, some kind of support. And most times it's around the previous, actually support is likely to be around this region, you get. it's likely to be around this region, because previously it was an area that was support. You get, it was an area that was support. So that is the directional bias, even anticipating the areas where you are expecting prices to find, let's say, support. So I expect it to be around this region. So prices come, we get a new high. When we get a new high, they fall. So now what do you wait for? Most times we get what we call equal lows. How do you get the equal lows? We got them clearly on H1. But then that I mean, you can see that prices went up here, they came back down here, they tried to go up. Remember, these are significant candles on H4. They come, so you can see 3 swipes to the bottom, like this one, and this one. And when you go, let's say on H1, let me quickly go there, you're going to see that they are somehow, prices are somehow resting on in the same position. Like prices came, they hit the same place again, they hit it like the third time. So what do we expect? We expect that prices are going to go up. They come, like most times, or less on the first time, they will come as if they're breaking out down. You get, prices shall be as if they're breaking out down. That is what they call this is another liquidity zone. So this is where we expect another order block. Prices shall come, they hit as if, now they come and they break out here in this region, because they've been hitting this region without breaking out. So when they break out shortly, we look for the H1 order block, because we know our target is here. We know we are filling up a space up to here. So what do? They target these breakout traders, thinking that now we've reached this, we've broken out this region, we are coming here. They come hit your stop loss, and then they take the prices up. So for us, we already drew our boxes, we know where we are going. So when we see something like a breakout here, for us, we see it as an opportunity. You get? So let me quickly go back to H1, and then we see that order block that I'm talking about. You can see that prices broke out here. All of a sudden, we see this bullish candle. You get? So we do take entries on this next candle here. You get? So we buy until we reach our demand, our supply zone that we expected to reach. Our supply zone that we expected to reach, which is this one. So now when we reach here, remember, if this was another block to sell that was pushing prices down, you get, this was another block that was pushing prices down, but we got imbalance, whereby the market was not balanced, so we had to fill up. What does it mean? I'm giving the reason as why I expected prices to fall down up to here. Now, given that we've been filling up the gap, and then we were previously going down, that means we have to go back to our direction. So now we go back to our direction. That's why I drew this box, anticipating that prices were going to fall from this region up to here. You get? So now you can see that yes, they came, they tried to go back to retest. This is another confirmation now that you could take on this other leg. You get? This is another W. You can see the way it's moving, it has made the W, and now we come. So now let me quickly explain now why I expect prices to come here in this region, and then they come back to this region. Now that is what I'm expecting. Now when you look here, when prices were coming to our region where we anticipated them to come, they first went back. We came to this region of resistance. We didn't reach it very well, as we know the market always finds new regions of support and resistance. You get? So at least that we know. So the market went back, and now we came back down. So as the market went back up, we can see that we had a structure created here. You get? Though we also have another one, minor one. Actually, when you draw these ones and then you go on smaller time frames, you will see many things, because you'll be seeing a bigger picture. You see new opportunities. Now there was this small structure here. When you go on smaller time frames, you're going to see that it is more significant or more visible. You get? So prices, they went back up, and now they started to fall. But now we get another area of imbalance. You get? You look at this bearish candle shooting so sharp down at this area of breakout market structure. So now what is this? This is another imbalance. You get? Imbalance. And now when imbalance happens, what do we expect? We expect mitigation. Mitigation, that is to fill up the gap that buyers didn't participate in. You get? So as the market comes, we know that it makes a W. It will go like here, and it comes back, then we start our process of filling up the gap. So now the market already, it came, now it has gone back here. So now we have started, we are coming down to this area, and then we shall start on this process of filling up the gap. You get? So now here, when you see something like this, now as prices are coming down, you go on smaller time frames, given that this is your area of entry. You get? Given that this is your area of entry, when you go on smaller time frames, you're going to see such movements whereby you're going to see prices are shooting, they're coming constantly down, and all of a sudden they shoot up. You get? So you get better entries. And now I've made many videos about how you can go on smaller time frames to spot opportunities. So you watch them. I don't want to make this one so long. You get? So that is the directional bias. The other thing that I promised that we can put an indicator. One of the indicators that I love most is a MACD. Let's just put a MACD. So you have your own indicator that gives you confirmations. So after doing all that, when you put your indicator, I think you can see that it's going to be resonating with what you've determined. Now you can see that in this region where we were expecting to fill up mitigation, first of all, prices were falling here. You can see that even on the MACD in this region here, we can see that it was up, and then we got a signal that we are coming down. You get? We are coming down. But then for us, when we draw these lines, these predictions, we know where to turn, the turning points. You get? Now we can see that prices went back up, and then we are continuing down. Actually here it is showing that now we are still in a downward trend, though we even continued, we tried to come up, but now the MACD was showing us that we are still in the downward trend. We are still continuing down. So we sold again. We got our imbalance. You get? Now you look at this mitigation. You look at these lows. You get? I always say the hidden divergence. Now you look at these lows here. This area here. This area here. Look at it critically. And then if you've watched my video about hidden divergence on the MACD, and then you look at these legs that it has showed, you get? For it is showing us that this leg here is this is a higher, what is it called? Higher low. Yeah, a higher low. You get? Or a higher high. You get? That's what it's showing us. But on the chart we are seeing this, and then I said when we see such things and then we get a signal here, that means we are going up. You get? We are going up for a long time. You get? So after getting this signal, trust me, in this area here, after getting this signal here, and I would take entries here, you get? And I be in the trade up to up. You can see it came up, it crossed up until when we reached here. You get? Until when we reached here, and now it is showing us that you look at these ones, the equal lows, equal double tops. Look at the double tops here, these ones. Look at them very well. It's not perfect, but look at these double tops, and then you look at our indicator here. It is also showing us double tops. What does it mean? That this is like an M. You're seeing that pattern of M. So here I would take entries. You get? Actually no, those double tops, they were for this region. Let me delete this. The hidden divergence on double tops. Sorry about that. You look at this region here, the directional bias. So now we can see that in this region, from here, this top here, it's not working out well. This area here that you're seeing, from here to here, you look at the indicator, it is showing us double tops. So when you get an our signal here, it meant that we are going to go down for long. You get? So now going forward, you can see that now the indicator is starting to show us that now we are getting a signal to go up. You get? By that I mean you can see that the histograms are reducing. Sorry, the histograms are reducing, but then the histograms are reducing, the signal line is coming. So we are going, by the time it reaches here, we expect to get a very clear signal for us to go up. And this is our area, because this is the area where we saw the order block. You get? We got the order block here. Let me show you the order block where I anticipate that it's going to just read the share. So you can see that prices shot up so quickly here, but then we got this strong bullish candle, and then we get all of a sudden negative candle. I said always be careful when you see negatives, sharp negatives. Ask yourself why we were moving so strongly up and then all of a sudden prices fall. Always ask yourself that. So now you can see that now prices are going to reach in this area. So I expect that going forward prices are going to come here up to here. You get?